Let's stay with what looks like an absolutely freezing Germany there. We've got Ralph Solveen now from Commerzbank. He's also in Frankfurt. He's with us now. Ralph, thanks very much indeed for joining us. First up, what did you make of these numbers that we had this morning?
Okay, I think they were also a little bit weaker than expected. As already mentioned in your report, we also looked for a minus of 4.8%. But, okay, we will see, as it also already discussed, what that will mean for the fourth quarter. But from this number, you cannot make any comments on the fourth quarter because perhaps we have some revisions to the first three quarters or something like that. The more important numbers will be for the fourth quarter, which will be published in 1 month's time.
What are the prospects for 2010 there?
Okay, we think that the recovery of the German economy will go on, perhaps with not the same high speed as we have seen in the third quarter, but it will go on, and because the rather strong second half of 2009, we think that German economy will grow this year by more than 2%. Our exact forecast is 2.25%.
And of course, you know, if we look at monetary policy, it's hugely expansive still. When that starts tightening, A, when do you expect it to tighten? B, what is likely to be the impact?
Okay, we think that Germany in the moment is one of the leading economies inside the euro area. We have other economies like Spain which are lagging behind. Therefore, and given that there are still massive unused capacities in the eurozone, therefore there's no big inflation pressure, at least for the time being. Therefore, we think that the ECB will wait some time and they will not hike the interest rates until the second half of this year. And because of the usual lack of monetary policy, it normally takes 4 quarters roughly that you see an effect of a monetary policy action on the real economy that will give a break to the growth not until the end of 2011.
Ralph, if we look at the euro, I mean, it's been pretty strong by historic standards anyway, and again, if you look at it even with the legacy currencies, does that surprise you that that has not really dented Germany's export drive?
Okay, I think although in the past the main driver for the German exports was still how the demand in the main trading partners developed, and there we had a recovery. The development of the currency, I think, in the most cases means also that okay, it will dampen or fasten up the recovery. Perhaps German export would have behaved even better if we would have a weaker euro. But as I said, the main driving force is the development, is economic development in the main trading partners, and that is in the moment rather positive.
Very quickly, very harsh winter there in Germany. What's the economic impact?
Okay, I think that is a risk for the first quarter, perhaps. Or it seems so that construction will get a damp in the first quarter, but I think that will not have a significant influence on 2010 for a whole.
Ralph, thank you very much indeed for joining us. Ralph Solveen there joining us.